Amanda, you're very welcome back again.
Thanks very much.
We are today getting questions on inheritance tax. Yep. And we've spoken to Donal, and I've done the intro, and we've spoken to Donal. Really interested to see what is on people's minds in relation to inheritance tax. So we just jump straight in. Yeah,
we got let me say we did get a lot of questions on this, so we've done our best to shortlist it to a list of questions that will benefit everybody.
Okay. That's always a sign that it's a topic we need to come back to. Yeah. Okay. And we've said that about couples, and we've said that about property as well. And we will come back to this.
We have the list.
We have the list. Yeah. Okay. Let's jump in with the first one.
Yeah.
Hi, I have a question on estate planning after you're gone for your loved ones. What are some of the measures that you can take in advance while you're still alive to plan out your estate and your various sources of wealth? How can you organise and plan those in a way so that when you're gone, the probate process and everything around that, which can be a real sticky, messy situation for a lot of families, how can you make that as simple and as transparent and as pain-free as possible so that ultimately the wealth that you do pass on after you're gone is a positive and joyous one for your family members? Thank you.
This is really just about structure, isn't it?
Yeah, I suppose this person's looking at making it as easy as possible for their kids.
Yeah.
When planning ahead.
Yeah, I think it was Alex Ferguson said, if you don't know the answer to if you don't know the answer to the question, the answer is no. I think I have that quote more or less, right? And it's a bit like that when it comes to your estate planning, right? There's things you can do, and I'm not talking about Section 72 and Section 73 and how you distribute the assets or any of that. I'm just talking about the simple, what Guy caught there was the probate, making the probate process as simple as possible, right? And what I would say there is like Alex Ferguson's question, I would say, if you don't use the bank account, you don't need it. Okay, if you don't, try and simplify things as much as you possibly can.
Okay.
The probate process is much easier to do if you've one bank account compared to if you've 10, right? It's much easier to do if you've got one investment instead of 10 different investments with 10 different companies. So the simpler you can make it, if you're looking at a bank account saying, could I close that? If you're even asking the question, I would be saying, close it down and bring it all together. So it's just a simple structure, first of all, of trying to simplify it, okay? The other thing is there is nothing more valuable than a regularly updated balance sheet or net worth statement.
Yeah.
So a net worth statement or balance sheet is everything you own and everything you owe. So if you owe money, and the more detailed, the better, right? Put the policy number in for the investments. Put the mortgage account number if you've got a mortgage. Put the life policy number if you've got an insurance policy. And have it all as a record of truth. One piece of paper somewhere or one document somewhere that people will be able to access. And do it. And what I would suggest you do is
tell someone about it.
Someone about it. That's exactly where it was going. You need to set a reminder on your phone that I'm going to do it today. And I'm going to remind myself this time next year that when I do it. But when I do it today and when I have it complete, get that one-page document and fire it off to the solicitor who has your will.
Okay.
Now, step back a bit. If you haven't got a will, that's the first step. Get yourself a will, right? And most solicitors will charge you very little to do a will. And let's face it, the reason why is because if they did the will for you, they're more than likely going to do the execution of that will later on when you're gone. So that's where they'll get their fees and they have to be paid. And no problem with that, right? But having a will, first of all, but then trying to simplify your accounts and then putting a net worth statement together that you update regularly and you fire it off. That's why when oftentimes when people come to us as a financial planner, when someone has a good financial planner, we'd say, right, this is your record of truth now. We want you to know that if something happens to you, your family know that they can contact us and we have a record of truth. Okay, so I think that answers this question, doesn't it?
Yeah, and I suppose you touched on it there as well. If it's something that doesn't sound like you can do it yourself, get help from an advisor or planner.
Absolutely.
Yeah.
And talk to your solicitor, but also talk to the family.
Yeah.
This is how it is. Look, that's my balance sheet. That's what it looks like. You're probably, if you're thinking this way, you need to be, hopefully you can be at a stage to say, look, you're the executor of my will. Have a look at this. This is where there's any questions now while I'm alive and I can still tell you about it, because it can be a nightmare of a process.
I know. And some people just don't want to talk about it.
No, it's tough.
When anything comes up like that, they just don't.
Shut down.
Don't want to talk about it.
Yeah, and that can be both sides. That can be you as the person who's planning what's going to happen after your death, and it can be your son or your daughter are going, I don't want to talk about it.
Acknowledge it. Yeah.
Absolutely. Let's go for the next one.
Hi Owen, this is for the podcast in terms of inheritance tax. I had a relative who had a pension that was worth around 200,000 in the UK, and they passed away when they were 73. I don't think anything was done with it. I'm just wondering what the situation is there.
So really, this is a pension in the UK. Somebody has died in the UK. One of the things you have to do is the first thing you need to do is get in contact with ideally a financial advisor, a financial planner in the UK, and talk to them and say, look, we believe that's there. Can we authorise you? It's the executor of the will have to authorise the person to go searching for it or find it. If you've got policy details, if you've got any details at all, that's really going to make the search much easier. The executor is the one who's going to have to go and start chasing this. If it's going to be brought back and distributed through the estate, tax rules will apply. Yeah. Whether it's the UK or anywhere else abroad, there's a huge amount of countries, right, that we would have what's called a double taxation agreement with. And you would expect that what would happen there is, depending on the agreement and how it's set up and where it is, you would expect that if there's any tax deducted from it there, you'll get credited for that tax here if there's any tax due here.
Right, okay.
At 200,000, it depends how wide it's spread. It depends how much tax. So there's a whole, that's a complicated one. So I'm not sure what the answer is, but I can tell you what the starting point is to try and get the policy number and try and get the executor to engage with a financial advisor over there, or get the executor to engage with the company directly and say, what are our options here? These companies are dealing with these things all of the time, and therefore they will have a very clear, precise process that you go through. What
about if that person didn't have a will?
If that person didn't have a will, there'll still be rules around it. Sometimes even a pension in particular, and they mentioned it was a pension, will have a thing called a letter of wishes. So a letter of wishes is an instruction from the individual to the pension provider to say, if I die, this is what I want to happen. It doesn't actually have full legal standing. That's why it's called a letter of wishes. This is what I'd like to happen. And it gives the trustee an indication of what the desired outcome would have been. Okay, so if they don't have a will, but if they don't have a will, they died intestate and they will end up it'll be divided down. We are definitely coming back to wills, right? Because this was inheritance tax and wills. It kind of went, we're going to get caught up there, but we'll definitely get someone in to come in and sit down with us and talk to us about how wills are distributed and what happens with the UK. Because that question in particular, I'm jumping out of two of my lanes, like I'm jumping 2 lanes across. I'm not a UK advisor, I'm not a legal person, and I'm talking about tax. So it's 3 areas that we're not. So I'm giving general information here, and I'm not even confident on everything that I've said there to be totally correct. So what I would say is get started by contacting the pension house first, whether that's through an advisor or directly to them, and they will generally only deal with the executor of the will, and that's it.
Yeah, so you've given that person a starting point anyway, and
I don't know what the end looks like, but that's the starting point. Another one.
Hi Owen, Kate here. What do you think about taking out a Section 72? Estate approximately 4 million, 4 kids. Is it worth taking one out? What are the pros and cons? Thank you.
So there's an estate there of 4 million. There's 4 kids, 335,000 each for threshold. So let's just round it to 1.2 million. That means there's 2.8 million in that estate that's going to be taxable, assuming no other reliefs apply. Okay. Roughly a third of that, again, I'm rounding. There's about a 900 grand tax bill potentially that's going to have to be paid there. Okay. Between the 4 of them. Okay. Section 72 is an interesting, what it does is it's an insurance policy. Okay. And you take it out on, let's say, in this case, the parent. Okay. And when the parent dies, the policy pays off the tax bill. And you receive the estate tax paid. Okay. Now it'll never be perfect. So I'm guessing, and I know I did a whole pile of rounding, but in this case, what you do is you take a €900,000 Section 72 policy out. When the person dies, and if it's a couple, it's when the second person dies, because that's when the tax bill will kick in. The second person dies, the €900,000 is paid to the estate. The solicitor can use that 900,000 to pay the tax bill. If the tax bill is $1 million, they have to come up the rest of you are going to, the 4 of you are going to have to come up with 100 grand. If the tax bill is €800,000, the 900,000 is still paid out, the 800,000 is paid out, and the other 100 grand extra just goes into the estate. And funny enough, slightly increases the tax bill again, right? So it's kind of round and round. I know it's complicated, but basically what it is, it's an insurance policy that pays off the tax bill, or as close to it as you possibly can get to it, pays off the tax bill. So you receive the money, not tax free, but tax paid. So the 4 siblings here would get the money tax paid. People look at it as insurance policy, don't like insurance policies, doesn't make sense. The calculation we often do here when we're working out Section 72s is we say, okay, let's say, just to keep the maths really simple, imagine you were covering €100,000 of a tax bill. And imagine the premium was €1,000 a month. Now I'm totally making up those numbers, right? Completely, right? Yeah. The tax bill is 100,000. That's what you have your insurance on. It's €1,000 a month. We will do a calculation there to say, how many months do I have to pay into it before the amount of money I've paid in is greater than 100 grand, the amount that they're going to pay out. Okay. And what happens is like in that case, in that simple example, it's 100 months and you're breaking it. And there's a whole pile of other technical stuff that we can do to try and never break that you never pay in more than what you can pay out. But to simplify it for everyone, we say, okay, we've worked it out. And typically if we have someone in their 50s or the 60s, we'll work it out and say, do you think you're going to die before 98 and a half years of age? Or do you think you're going to die between now and 106 years of age? And they say, I'll definitely be dead by then, right? Say, well, if you die at any stage before your 106th birthday, you will have paid less into it than what that's going to pay out.
Yeah.
Does that make sense?
Yeah,
so
that makes sense.
Section 72s, they are very, very worthwhile. We use them all of the time. Like they're a really useful tool. They'll never be perfect because you'll always overshoot or undershoot the runway in terms of the tax bill, but it doesn't matter. If it's overshoot, it goes into the estate. If it's undershot, you just have to come up with a bit more.
Okay.
The other thing that people get caught out and they look at the premiums and they go, oh God, that's a lot of money on a month-to-month basis to be paying out, right? This is like, you should be eating into the 4 million to pay for it if you have to. Like, that's not a problem.
Yeah, and because that was the other thing I was going to say. I suppose this is if the parent wants to take on paying that themselves or leave it to the estate. That's
a brilliant one because it's the parents has to drive this, because some parents will say, but I would say it's fairly close to 50-50. So we'll have a conversation with our client, we'll say, okay, you're going to leave a tax bill in that circumstance of €900,000 is the rough back of the fag packet calculation. What do you want to do about that? 50% of our clients will say, feck them, they're getting enough, let them pay the 900 grand. And 50% of them will say, no, I want to do everything I can. It really kills me that the tax man's taking a big chunk of cash just because I died. Yeah. Right? So there is kind of a balancing act to be done there. One of the things is using that same example, the 900,000 bill, right? One of the things you do need to be careful of is some people say it's an all or nothing thing. It's absolutely not. Like you could do a 300,000 Section 72 and the 300,000 be paid out in that example, 600,000.
Okay, right. So you could just do a portion of what will be due.
And oftentimes what we would look at is we'd look at the estate and say the estate has a huge amount of property in it. We would say, you know what, you really don't want to have to be forced to sell the property to pay the tax bills. For each of the 4 siblings to have to pay a tax bill, because you might have to sell the property exactly the wrong time. So therefore, let's make sure that we've enough in the Section 72 to be able to pay the tax bill when we take the cash into account, right? Wipe everything else out, use all your cash and the Section 72 combined to be left with just the properties so that there's no forced fire sale on the property.
That's a good point,
So it's not an all or nothing thing. There is a couple of, there's a product in the market that we use a lot, which brings in a whole pile of extra stuff that if in 15 years time or more, you wanted to cancel the policy. So say you'd spent loads of money, or the tax thresholds had gone up and there's no tax bill anymore. You've been paying into this yoke for 16, 17, 18 years. You're going, Jesus, I've just wasted and I don't need it anymore. Maybe you just don't like the kids anymore, right? Maybe they're just brats and you're saying, let them pay the tax bill, right? And you go, I'd love to cancel this policy. There is a contract that we use that gives you 3 options. You'll keep paying it and it stays as it was. The second option is you stop paying it, and instead of having 900 grand to cover, and I'm making the number up, they'll say, and you can see it in advance,
to a certain point.
They will say, we'll give you 600 grand whenever you die. Okay, so they'll tell you in advance this is what it's going to be. Like they'll tell you today what the offer is going to be on 16 and 17 and 18 years and so on. Or the third option, which is the one where I don't like the kids anymore, right, is, you know what, just give us a refund, and it's typically 70% of all my premiums I've paid in. Okay. So it's a bit of a game changer, because traditionally these Section 72 policies were a situation where you were looking at it and you were going, oh, maybe the tax rules have changed, or maybe I won't like the kids. I'll pay into this thing for 15, 20 years. And then you just cancel it. And the life company is delighted because they've collected 15 or 20 years of premiums off you, and they never have to pay out now because you've just cancelled it. Okay. Yeah. Whereas with these 3 options, you continue paying, you lock in a life cover amount and they'll pay that out whenever you die, and you know what that is in advance, or you take a refund of about 70% of your premiums. Okay. And it's just a game changer, and that's why for me it's been something that's really dramatically changed. When that product came out a couple of years ago, I said, okay, this is something we can really look at again. Yeah. And I think just to go back to that person's question, I think they sound like they're in a situation that they could use the help of a financial planner or
advisor and getting that set up.
Absolutely, like totally.
Yeah.
And there's other things that person might be able to do.
Yeah.
But their specific question was Section 72, and do I think it's worth it? It's the last line of defence. You do everything else you possibly can, and then you say, okay, what's the tax bill going to be now? And you use Section 72 then.
Yeah.
So absolutely, no brainer.
We've one more question.
Oh, do we? Okay. Right, let's try and get this one done.
Hi, Eoin. Just in relation to inheritance tax, I would love to know more about broken families, I suppose. I'm married with 3 boys, but my eldest son is not my husband's. We have all got the same surname, so he has changed his name by deed poll. But if something was to happen to me first and then my husband left it to him, what kind of tax would he be subject to? Or do we need to put something separate in our will to take account of that? Thank you.
Okay, this is actually fairly straightforward. So that your eldest son, as she described, or her eldest son, has a stepfather.
Yeah.
She doesn't mention anything about the biological father, but she's a stepfather. My understanding is that that child has a total of 335,000 that they can inherit from their parents. But that child effectively has 3 parents.
Okay.
So the biological father, the mother, and the stepfather combined in total can give a total of 335,000.
Okay, so that covers off a step parent as well.
Yes, step parent. So you wouldn't have heard it, Amanda, but Donal and I did speak about foster children, and there's a different rule around foster children. But with stepchildren, where the new family has got married, right? In this case, the husband, their husband and wife, and I know the deed poll and everything happened as well, but their husband and wife, that eldest son's actually in a better position than his siblings are, because he still is a total tax threshold of 335 spread across 3 parents.
But he has 3 potential.
Whereas his siblings have 335 spread across 2 parents. That's it. So it's actually kind of it is straightforward, and he's not really disadvantaged unless he's left loads of money. And he goes well over the 335 from the 3 different people that are involved.
Okay, so that's just straightforward. There's nothing that she needs to do there. Yeah,
no, absolutely no.
No, married,
and it's done.
He'll be treated
and she doesn't need to worry about who dies first or whatever way it works.
Okay,
it's strangely enough.
Yeah.
In this circumstance, the tax system does recognise the new unit and does recognise the relationship between the eldest son and the stepfather.
Okay,
they were good. I like those ones today. And you know what? It just shows you the questions and the thoughts and what people are thinking about.
Yeah.
And I do think we definitely have to come back to this, don't we?
Yeah. And thanks so much to everyone who did send their questions. And I really did try to shortlist it to cover as much as we possibly could. And I do think that it is worth revisiting, because this has definitely been the most questions we've got in.
Okay.
On any topic so far.
So if people do have questions, Amanda, where do they send them to?
So they send them by voice note on WhatsApp to 087 291 0507. That's 087 291 0507.
Excellent. Amanda, thanks as usual.
Thanks for having me.